Welcome back to Zero to Zeros. You're here because you understand the core lesson of wealth. The rich buy assets, and the poor and middle class buy liabilities disguised as assets. But here is the new problem. Once you've stopped buying new cars and learned to question your mortgage, the biggest hurdle remains. How do I actually buy an asset that works for me? For years, we've been told that investing is a dark art, full of risk, complexity, and that you need thousands of dollars just to get started. That lie is designed to keep you on the sidelines. It is the cost of delay, and it's the most expensive lie you will ever believe. Every year you delay starting is a massive cost, thanks to the magic of compounding interest that you are forfeiting. Today, we end that cost. I am going to show you with absolute clarity how to build a powerful, diversified investment portfolio starting with just one single $100 bill. If you have $100, you have zero excuses left. This is the exact blueprint to finally start. The first and most critical step is simple: establishing your home base. You need a safe, regulated place to hold your assets. You need a brokerage account. Think of a brokerage account as a highly specialized financial storage unit. Now, beginners often stop here because they don't know which type of account to open. You have two main choices: a standard taxable brokerage account or a tax-advantaged account like a Roth IRA. If you are just starting and haven't maximized your retirement contributions, the Roth IRA is arguably the single best asset you can own. Why? Because the money grows and is withdrawn tax-free after you retire. You pay zero taxes on all those decades of gains. This is a massive advantage the wealthy use. Your action step number 1: do not overthink the choice of brokerage. Pick a major low-cost firm like Vanguard, Fidelity, or Charles Schwab. Open either a simple brokerage account or, if you qualify, open a Roth IRA. Fund it with your first $100. It is now time to buy. Every great investment portfolio starts with an unstoppable passive engine. That engine is asset number 1, the index fund. The index fund is the single best recommendation Warren Buffett gives to the average investor. You are not buying one risky stock. You are buying a basket that tracks an entire market index, like the S&P 500. Which holds tiny pieces of 500 of the largest, most stable companies in the United States. When Apple grows, you grow. When Google grows, you grow. This is the ultimate diversification. You are betting on the stability and long-term growth of the American economy, which has survived wars, recessions, and pandemics. Historically, the S&P 500 returns an average of 10% per year over the long term. This isn't about getting rich quick. It's about getting rich slowly and surely, without having to check your portfolio every day. Your action step number 2: take 70% of your initial $100, that's $70, and purchase a share of an S&P 500 index fund ETF. Look for tickers like VOO, Vanguard, or FXAIX, Fidelity. This is the safe foundation that guarantees your future wealth. Once your foundation is set, you can strategically introduce a growth accelerator. This is asset number 2, the sector ETF. A sector ETF is an exchange-traded fund that focuses on a specific, high-potential industry that you believe will outperform the general market. Think cybersecurity, semiconductor technology, clean energy, or global infrastructure. You are introducing a measured risk here. You are still diversified within dozens of companies in that sector, but you are specifically betting on a focused industry trend, such as the global shift to electric vehicles or the continued rise of artificial intelligence. This adds a layer of excitement and potential upside without the crushing risk of buying one single stock. Your action step number 3: use 20% of your starting $100, that's $20, and purchase a share of a sector ETF. Choose a sector you personally understand and feel passionate about. This segment of your portfolio is designed to accelerate your returns, slightly above the market average. Finally, we arrive at the most exciting yet dangerous part of investing. This is asset number 3, individual stocks. This is where novices lose their money because they go all in on one hot stock tip. We follow the 90-10 rule. 90% in safe, diversified funds and only 10% in individual picks. This 10% isn't just about making money. It's your learning capital. It's where you teach yourself fundamental analysis. Why does this company have a durable competitive advantage? What is its PE ratio? You are training your brain to think like an owner. Your action step number 4. Use the final 10% of your $100, just $10, and purchase a fractional share of a high-quality company whose products you use every day, like Amazon or Costco. You are now a partial owner of a great American company. Let's quickly review the breakdown of your powerful $100 portfolio. $70 in index funds, safety and stability. $20 in sector ETFs, acceleration and focus. $10 in individual stocks, high-growth learning. You have built a highly diversified, sophisticated portfolio. Now, the absolute key to wealth is consistency. If you can automate an investment of just $100 every single month and achieve the historical 10% average return, in 20 years, your total investment of $24,000 would grow into nearly $76,000. You didn't get rich quick. You got rich consistently. The lie that only the wealthy can invest is destroyed today. You are an investor. You have built an asset that is putting money in your pocket. Your goal is clear. Keep the assets column growing faster than your liabilities column, without fail. If you found value in this blueprint, hit the subscribe button right now. This is Zero to Zeros. We are here to change your financial future, one asset at a time. Let me know in the comments, what single asset are you going to buy first?